I know that what I did is I handed out and you have a copy of how much money your employer is actually asking you to contribute to each one of those 3 plans. I know those numbers seem somewhat exorbitant and pretty high, but I would just want everyone to understand and that your employer is gracious enough to have been paying quite a bit of money as well. So it's not as though your employer is asking you to cover all the bills. So they are contributing quite a bit to this as well. That was the first thing I want to say. Second thing I want to say is something that's probably not, you can't tell this, and it's not written anywhere on the on any of the handouts. The HSA plans are what they refer to as non-embedded, which just means if you're a family plan, and if you the family plan for an HSA, if you can switch over to like the bronze plan. Okay, if you look at the bronze plan, you'll notice that there's a 5,500 individual and 11,000 family. If you're taking a family, that just means that you're not covered at all until you hit $11,001. Even though one individual person might break the 5,500 limit, that's the way the policy works. So that's referred to as non-embedded, which means if you're taking a family plan, ignore that $5,500 single, it's an $11,000 deductible. That's how it works. If you look at the EPO plan, which is actually the plan summary number 1, which we're going to bring on the screen, if you notice, that looks like the HSA plan. Look at the Freedom. If you look at the Freedom Gold, which is number 4, see the 1250. The way the EPO plans work, that 1250 it's per individual. So if you're married, you don't have to reach the 2,500. If one person has quite a bit of medical coverage, by $1251, they'll cover that person. So in other words, they count each individual person, and they accumulate the deductibles for each individual person.
Can I ask a quick question?
Sure.
So what if one person were to exceed the 2,500? Would both people?
Yes. Once you hit 2,500, everyone's covered. It's full. Then you get into the coverage.
Right.
But it's 2,500. It's an umbrella for everyone in the family. But EPO, it's the 1250. So if one person hits 1250, he's fully covered, even though family member number 2 is not. But right, when you hit 2,500, everyone's covered. So that's the difference really between the HSA. It doesn't say that specifically, but that's really what how that works. Also, one other thing, and this is one of the questions that was posed, the deductible amounts that, even though the plan, this is starting 9/1, any deductibles that have been incurred until 8/31 will carry over into 9/1. Since this is a calendar year, which just means that on 12/31, everything restarts back to 0, and we start from scratch again. So, but whatever you've incurred through the first 8 months of this year will continue for the last 4 months of the year, for September, October, November, December. So that'll continue. Just a comment on the deductibles. If you go to an out-of-network provider, and if you'll notice, all the 3 plans have no coverage for out-of-network. And that's true for most plans that are written today. There is no out-of-network coverage at all. If look carefully on if you as for Obamacare has a rule that you must cover people for an emergency room for out-of-network. So even though I guess the expectation is that if someone is, God forbid, sick, there's no expectation that you're going to run out and start finding an in-network hospital or in-network coverage. You run to the nearest emergency room, you get your coverage, and the insurance company must cover you for that out-of-network. So if you look carefully on your grids, you'll notice everything on the out-of-network is not covered until it hits emergency room, and then there's a coverage for emergency room. Right, see emergency room, see over to the side, that $400, that's the $400. Right, that's the coverage for emergency room. What it doesn't, I don't think this grid shows you the out-of-network coverage. It just shows you the 3. Okay, see the out-of-network is. Okay, that grid under out-of-network should state that emergency room is covered. I think the other grids that we have from UnitedHealthcare if you can bring up, not the plan summary, you can bring up any one of like the Freedom Gold plan. It should stay the fee not covered, not covered, not covered. If you continue going down, at some point you'll see the emergency room care. There is a copay, and deductibles does not apply. So that's the only thing within a network that's not covered. But it's important to note, and this is one of the questions people have asked. So what if I go to any out-of-network person, out-of-network doctor for a legitimate procedure, that does not go against your deductibles. So if your kid is sick and you run to a doctor that's not in your network and he charges you $150, you can't. It does not apply to your deductible accumulator. The other thing also, it's important to note, if you have copays, and on the EPO Gold plan, there are copays. There are various different copays for different procedures. Those copays also do not count towards your deductible. Okay. Okay. One other thing, when it comes to out-of-network, again, you're not covered for out-of-network, but I will tell you that the way out-of-network works, technically the doctor can charge you as much as he wants. You can go in for a laryngitis, and the doctor can charge you, $12,000 if he really wants to. It's not a regulated market, and the doctor is allowed to bill you for $12,000. Again, your insurance company is not going to pay 10 cents. If that should ever happen to you, you can. There are ways to fight the doctor. You can actually claim. There is something called UCR, usual customary, and there's also Medicare rates that they have to pay. I found, I've had instances myself personally where I've went to an out-of-network doctor and I got charged thousands of dollars because he took advantage that I was out-of-network, and I called him on the phone and he reduced it down to what the UCR rate was. So if that should ever happen, you don't have to listen to the doctor and just pay him whatever he wants. I just want to make sure that you're aware of that. We talked about COMANs, we talked about HSAs and EPOs. I mentioned that deductibles will be carried forward. Let me talk a little bit about HSA plans, because this might be the first opportunity for you guys to get involved in. I personally switched when I had an opportunity from my employer, and I switched, and I am part of an HSA plan.
Can you explain what an HSA plan is?
Yeah, let me do that. And let me tell you why I chose to switch. There is something I will hand out to the management, to the HR team here, and you can probably provide this to the employees as well. I probably should email it to you. But there's a write-up about what an HSA is. An HSA plan effectively works very, very similar to like a 401k plan. You can contribute to an HSA. Effectively, there are banks that are HSA banks. There's a bank called Avidia Bank. They are an FDIC-approved bank. I have an Avidia. I use Avidia myself personally. The way it works is you determine how much money you want to pull off your pre-tax money, and you contribute it to your HSA account. HSA account is a regular standard checking account, no different. You get checks, and you also get a debit card to be used for HSA approved medical care. And anything that is approved with an FSA is also approved with an HSA, except you can't pay premiums. So, for example, you go to a doctor, you go to a dentist. You can pay with your HSA card, and especially with these high deductibles, that's the reason why they gave these HSAs, because they're high deductibles. You can pay all your deductibles with your debit card or with your checks. The nice part about the bank I mentioned, Avidia, and you don't have to use Avidia. My guess is, and I do know that I use Citibank, and I know people use Chase. Citibank and Chase also do HSA programs, so many banks do this. Again, it's no different than setting up a checking account. What you do is you pull the money out of your out of your payroll, and you can take the money and you can deposit it into these accounts. Once the money is in that account, it's your account. Your employer doesn't own it. You own it. Your employer is not even aware of the fact that you have this. It's your money to do with as you will. That money, I shouldn't say it to do as you will. That money must be spent on approved medical or dental or vision related expenses. You can, and there are a lot of things, and this is all the IRS gives you, works on an honor system. You spend the money. You can write yourself a personal check from that account for, you went to the dentist, he charged you $375.29. You can write yourself a check for $375.29. You write it to yourself, and you can deposit it yourself. What you need to do, though, is you need to maintain the bills so that if the IRS ever comes saying, what is this $375.29 that you pulled out? What is this all about? You need to show it to them. So it's not your employer that needs to show it to you. It's you yourself personally that are responsible for it. What I like about Avidya is it does online banking. Any of the providers that I owed money to because of my deductibles or because things weren't covered, I've always gotten on to Avidya, and I've actually put the doctor's name in, and I've actually put the dollar amount in, and I hit press go, and it automatically sends a check to the provider. I don't have to really touch anything. But again, it's my responsibility to hold on to the EOBs, the explanation of benefits, the insurance form that tells you you're not covered because of the deductible, or you're not covered for whatever reason. You need to take that and actually submit that. Or, like I said before, these banks can offer you a debit card. So when you're standing by the doctor and the doctor says, you know, your charge is $200, you haven't met your deductible, give me $200. You can pull out that card and pay them with that card. The nice part about the HSAs is it's all pre-tax money. So if you decide that you want to put $1,000 or $2,000, or there are limits. The limit for a single person, I think the limit for a single person is $3,350. The limit for a person, any family plan, is $6,750, and these numbers are 2017 numbers. In 2018, those numbers go up. You could save more money. The nice part about the HSAs, you can put as much money in there as up to the max limit, of course. You can put as much money as you want. If you don't suspend it this year, it rolls into next year. So with your bank account, again, it's your money. No one has, if anybody's familiar with FSAs, FSAs has this use it or lose it. If you don't spend it in 1 year, your employer takes it back and you're left without the money. The HSAs is your money. The other nice thing about HSAs is you can put in as much as you want. You can change it as often as you want. As long as, again, you don't break the ceiling, you don't break the max amount. You can put in up to $3,350. You can start out by putting in $20 a month. And all of a sudden, in March, you have a really serious medical condition from someone in the family, and you know it's going to cost you a lot of money. You can take $1,000 or $2,000, drop it into your HSA, and then pay that through your HSA. Effectively, what you're doing is you're kind of, I shouldn't use this word, you're kind of laundering your money through an HSA and actually paying it with pre-tax money. The reason it's pre-tax is because at the end of the year, the bank gives you a statement that says, John Doe contributed, $2,675.39 to his HSA. That is effectively taken off your payroll. It reduces your pay by that much, and then obviously it reduces your tax by that much. So you're effectively paying with your pre-tax money, and that's the nice part about HSA. But the best part of HSA is it's yours, and if you put too much money in, it belongs to you. You can carry it forward. You leave your current employer and go somewhere else. It goes with you. It's not anybody's but yours. And that, by the way, because the HSA is so attraction, I personally switched to an HSA account. I do have an HSA Silver account. I look carefully at the numbers here, and again, it's the difference between this bronze and this silver. I think, as far as a contribution amount, something I noticed on the way here, the contribution amount between, and I'm just looking at the single, between the bronze and the silver, the contribution amount is, the bronze is $300 and the silver is $400. So it's an extra $100 a month to get the silver, but the difference between deductibles between the bronze, see let's look at the bronze. If you look at the bronze, the deductibles are $5,500. Well, you can go to the plan summary. Plan summary. If you look carefully at the bronze, see the individual family deductible is $5,500, $11,000, right? And look at the silver. Look at how much less the $2,000 or $4,000 is. I mean, it's significantly less as for deductibles as it is between the Oxford and silver. Between the bronze and the silver, and it's only $100 a month different. Or really, if you think about it, it's $1,200 a year more expensive to go with the silver. But look at how much smaller the deductibles are on the silver versus it is on the bronze. So that's just something I noticed on the way here. I had something similar with my employer, and that's why I personally chose the silver HSA plan. It's again, I'm not suggesting, but it looks to me that the silver seems like it's a fairly good deal over the bronze.
Well,
again,
it looks like if you spend between $3,200 and $5,500 in medical expenses per year, you're better off with the silver over the bronze.
Right. If you're a fairly healthy person, a single person, and you're not even going to, generally speaking, you're not even going to hit the $2,000 max on the silver. You may as well go with the bronze.
Right.
That's true also. But I'm not a fairly healthy person.
So here's the question. So you meet the $3,300 HSA ceiling this year, right?
Right.
So if you don't use it and you carry it over, you could put in another $3,300 next year.
Every year you can.
So you'll have $6,600, and that will be okay.
That'll be okay.
Because you're only contributing the $3,300.
It's just the amount you're contributing,
okay.
Right? That's all that counts. You can carry it forward, which means in 10 years from now you might have, if Nirvana, you don't spend anything at all, you have $35,000 in the bank. And the nice part about it, and is when you turn 65, that money you could spend on anything, vacations, liquor, anything you want. In other words, you need not spend that money on medical at that point. And that's why, to me, it's very similar to like a 401k. It's forced savings. It's tax-free. Whether you're going to incur medical expenses or not, it's an opportunity to take some, like save some of your tax-free money. The nice part about it, I don't want to, not here to sell a video bank or anything, but the banks also have an opportunity for you to invest the money. So instead of just sitting in a checking account collecting nothing from an interest standpoint, you can put the money into a number of different mutual funds and actually make money, especially over the last couple of months. You've seen what happened to the market. You could have taken that money and really grown it a lot. And you know, that's you know, if you're an older person, you're in your I shouldn't say older person, but as you're reaching in the 50s and the 60s and you're looking for retirement, it's really a great opportunity, that just something free that the federal government gave to us, and that's why if I could take advantage of it, it's not a bad idea to take advantage of it. Okay, I think I've answered the questions.
You explain what co-insurance is?
Yeah, co-insurance strictly is, as opposed to co-pays. Co-insurance is, if you look at any of the plans, it's like the HSA, I think it's 30%. Yeah, like a 30% after deductible. That is your co-insurance. In other words, the insurance company is only going to pay you for primary care visit. They're going to pay 70%. Your 30% is the co-insurance.
Can you give me an example of that?
Yeah, if you go to a doctor, and well, first of all these are based on Oxford's negotiated contracts. So you go to an in-network doctor, and he cannot charge you more than for that procedure that he does to you. He cannot charge you more than the agreed-upon price that the doctor can charge. Like Oxford sets a standard, and if the doctor wants to be part of the Oxford network, he must charge not a dime more than the agreed-upon contract. So the nice part about Oxford and United Healthcare is they have very, very, what they call deep discounts or very big discounts on those items. So getting back to your question, so you go to a doctor, if you were an out-of-network doctor and you went to the procedure, he would charge you, $3,000 for strep throat. If you go to an in-network doctor under primary care and he charges you for strep throat, the agreed-upon price for a strep throat culture and visit is $75. He will charge you $75. You'll have to pay that $75 out of your pocket until you meet the deductible amount. From that point forward, that $75, the insurance company will pay 70% of it. You'll have to pay 30% of that $75.
Okay, so can you just reiterate so I understand?
Mm-hmm.
So the bronze and the silver, you have to meet your deductible before the coinsurance kicks in.
Right.
When the coinsurance kicks in, then you pay 30% of what the doctor is charging you.
30% of what's the agreed upon price of the doctor, but yes, 30% of what the doctor charges.
But on the gold plan, there is no deductible if you go to the regular doctor because the copayment kicks in right away. The deductible that you meet is for other things, not for...
Well, yes, that's true. For the most part, that's true where the EPO plan will cover, there's a copay, and that's it. So it's $25 copay day one. So no one looks at the deductible. It's January 1st, 9 a.m. in the morning, you go to the doctor, you haven't met 10 cents of your deductible, you will pay $25 only, okay? But that's not every procedure. If you look carefully on that, some of them you have to meet the deductible, some of them you don't. But for the standard things like a standard doctor visit or a standard pediatrician visit, the EPO has a copay amount only. That's also the benefit of the EPO plan. That's why the EPO plan is so much more expensive. But with the HSA plans, and again, this is an HSA law, the federal government mandates that you can pay the employers, there's a minimal deductible, and you got to meet that deductible, and those are the deductibles that are on there. You got to meet those deductibles before the insurance company is allowed to pay 10 cents. So that's the difference between the coinsurance and copay. But again, I'll just reiterate, the copay amounts, the $25 you have to pay for that pediatrician visit, that $25 does not, unfortunately, that does not go against your $1,250 deductible. And like I also said before, if you ended up going to a pediatrician that's at a network and he charges you the same $75 and you pay him because you got no choice or you're out of town and you got to pay him, that unfortunately does not go against your deductible either. Okay. Let's see what else is here. As far as switching the premiums, one of the questions was if a child, family, spouse is added from the beginning, can they be removed without affecting the employee afterwards? They certainly can. But it's got to be what's called a qualifying event. I mean, if you have a child that decides to move overseas and you're going to take them off your plan, it will not affect you or the rest of the people that are being covered. If your child hits 26 years old, that child drops off your plan, and of course it doesn't affect anyone else that's on there. And that's what they refer to as a QLE, a qualifying life event, if that happens.
How often can you change the plan? Like, say I started September 1st with the gold plan, but by November I feel like I don't need it anymore, so I want the silver. Can I change it? Or can it only be changed like once a year? It's
only changed once a year during enrollment date, and that's it. So you have to really think about whether or not this is the right thing for you. And
enrollment is usually in September?
September, right. Your plan year goes September 1 through August 31st, and that's why we're here prior to September 1st, and that's why, of course, we need those the enrollment forms fairly soon. Just one thing else I should mention, I did mention waiver forms there. just so that everyone knows, your employer is required to offer you a medical coverage by, again, that's an Obamacare rule. If you choose to waive the coverage and you're not interested in the coverage because you have it through a spouse or for whatever reason, there are waiver forms that need to be filled out so that if your employer ever gets audited by the IRS, they want you to prove that I offered, every one of my people coverage and they turned it down for whatever reason. And that's why, if you look carefully, there are waiver forms on here as well.
To follow up on the enrollment period question, there are certain people who may be working part-time right now who are not eligible because they don't have enough hours. If they were to become eligible later on, let's say a couple of months from now, and they become full-time employees, can they enroll into these plans at that point?
Yeah, because that's what yes, they can.
Okay.
It's no different than if you hired somebody on March 23rd. I mean, obviously you're going to put them on. Right.
I think that's most of the
right. That's most of the questions
that we had before.
Right. Right. I will give you the HSA information. I would urge you guys to look at it because it's again, it's what I say. It's federal government has given everyone really almost a freebie for you to, and it doesn't happen often. Take advantage of it.
All right, guys. If you have any questions, you can please submit them. We have plenty of time.
Let me say this. If anybody has any questions about this, you can probably best thing to do is here I am offering you. They could submit the questions to
me.
Right, and
then I can forward you the questions.
And I'll be happy to make sure they answer them. Yeah, and your email address is?
Yeah, so if anyone has any questions, just email me, Patrick, and then I'll forward your question to
me. David, this is David, yes.
We have one question. So someone's asking, what if you did not previously sign up for the HFS plan? Oh, HSA plan.
Right.
And acquiring, hold on. How you scroll up? I haven't touched. Yeah, okay. What if you did not previously sign up for the HSA plan and acquire a high number of medical bills? Is there any sort of assistance or plan offered from Oxford to help pay these bills?
Well, first of all, the HSA plan, you could sign up the HSA plan anytime you want. You don't have to, like I said, if you don't decide not to sign up, okay, you can sign up for an HSA account anytime you want. If you joined an HSA plan, one of these
well, I think her main question, question basically is, can she sign up for an HSA right now and use that money to pay for bills that she received before she signed up for the HSA?
No, she can't. No, HSA is only from the time she signed up, the dates of service going forward. You can't. Right.
Okay.
Okay. But the other thing also, I don't know that question was asked. If you join one of these bronze or silver HSA high deductible plans, and you don't open this checking account, and you figured, you know what, I don't have any expenses, I don't need this checking account, you can open it up at any point you want, and then you can start paying claims that way. So if you know you've got to go to a doctor tomorrow and something severe happened, you can open the account today. And if the account is open today, you can go tomorrow, and whatever the expenses are, the expenses are. So in other words, you don't have to open the HSA plan on September 1st to use it. You can open it, like I said, if you have something serious happening in the middle of March, you can open it up in the middle of March.
So if the account is HSA, like the Liberty, the bronze, and the silver, but the gold isn't, but you wanted to open up an HSA if you have the gold, can you do that?
You can't. You can't. There are rules that the federal government mandates that it has to be very, very high deductible, and you can't. They're not allowed to give you any kind of insurance. Notice how its deductible is waived for the EPO gold. they don't they don't want the insurance company to pay 10 cents to you until you met that entire deductible, and that's why the EPO would not qualify for an HSA plan, for that HSA account. Right. I think when the federal government came up with this idea with these HSA accounts, they wanted to force people, it was an incentive to force people to take these very high deductible plans so they can reduce insurance premiums across the country. And you can imagine the premiums are a lot less expensive for the HSA plan. Right, because the insurance company is protecting themselves. They don't have to pay 10 cents until you meet that very high deductible, which is
So does anyone else have any questions?
David, is there anything else you wanted to go over?
No, I don't think so. Actually, you know what? Let me mention something else I noticed, and I just want to bring to your attention. If you look carefully at the drug, can we look down at pharmacy? Oh, the drug card. Okay. Notice how you see the three categories: the 10, 40, 80, or 15, 35, 75. Those are the different tiers of drugs. So I'm not a pharmacist, but if you basically something like I'm mentioning amoxicillin, I just know this with having kids. That's a very common drug. It's not an expensive drug. That's a tier 1 drug, and that's what the 10, 40, 80 is what your costs are for effectively for buying those drugs. If you look at notice how the HSA plans say internal deductible, INTDED. What that really means is that the drugs are combined together with medical. So that's what that is. But if you look carefully at the EPO plan, the EPO plan, it's not clear there, but it does say 1535.75/100. What that 100 really means is 100 deductible for any kind of tier 2 or tier 3 drugs. I don't want to get much detail, but that just means that even though the Oxford plan, the EPO plan, you notice has a $1,250 and a $2,500 deductible, they will only do a $100 deductible for a tier 2 or tier 3 drug. In other words, you don't have to meet the $1,250, you have to meet $100.
But if you need if you need a medication that costs $15, you don't have to pay that $100 deductible because it's not a 2 or 3 tier, right? Is that correct?
That's correct. Right.
And then for the other two, like you said, those 10, 40, 80 goes towards the $5,500 deductible, or
that goes towards the deductible, right?
So we have another question here. Someone just asked, once you meet the deductible, you still have to spend the out-of-pocket amount before receiving the full benefits, correct?
Yeah, there is a max out-of-pocket, and that max out-of-pocket is also something that's mandated by Obamacare, and those are the numbers. By law, you cannot offer anybody a plan for max out-of-pocket more than the $6,550 or the $3,100. So the max out-of-pocket, no matter what plan you have, otherwise you're not Obamacare compliant, is $6,550 for a single or $13,100 for a family. So God forbid anything major, any kind of disaster, you know, if you have a family plan, you're not paying more than $13,100. It's not going to bankrupt you. And from that point forward, everything is paid at 100%.
All right, are there still any more questions for David?
Right. So should I leave you all this paperwork? I gave you just paperwork. This is exactly what you have up there, but I brought it because I just thought there'd be a crowd full of people to hand it out, like the waiver forms. What's that?
Just leave it with me. I can.
Okay.
Yeah, I think we should scan it out and distribute it.
Is on there that I should email you because is that HSA, just a couple of different items about the HSA. And the,
Yeah, just email it to me and I'll send it out to staff tomorrow.
Okay. Right. Right.
All right, I'll give you guys about 5-10 minutes. If there are no more questions after that, we'll call it a night. David, so we do have another question that just came in, and it reads, on the enrollment form, what should we complete for Section C in terms of pharmacy with policy number, carrier, etc.?
I should have said that the only thing that's necessary on the enrollment form is Section A and B, and of course the top where you have to choose which plan you want, and then the signature on bottom. So Section C, the coordination benefits, is.
Well, she's mentioning Section C, the pharmacy.
Yeah, I'm saying Section C is not necessary at all.
It's not necessary at all.
Yeah, all Section C is not
So, just fill out A, B, and of course the top where it asks you for liberty, freedom, or I'm sorry, the bronze, silver, or gold. Right, and then the bottom section, which just asks for your signature and your email address.
So basically, you don't need to fill out Section C.
You do not have
That's
to
the answer to the question.
Yeah. Right, the Section C is a little bit confusing, but it's absolutely not necessary. It's just right. There's Section A and B, which is pretty standard, and again, if there's more children than 2, you can always add another enrollment form or another piece of paper. That we handle that within our office. So, if you,
Right. So.
okay. Guys, thank you. Thank you very much.
Well, I guess there's no more questions. Let's wrap this up right now. If you guys still have any questions later on, you can always email me and I'll forward the question to David. And also a reminder, if you haven't done so, please submit the enrollment form or waiver forms by the end of Friday. All right. So,
Great.
All right.
Thank you, David.
Thank you, guys. Thank you, guys.
Thank you, David.
Okay.
And good night, everybody.